have you with us. I wanted to start off with Costco. You've got a hold rating on that stock, so you were a huge fan of it. But I'm wondering what you made of the quarter and how you extrapolate the results onto some of the other stocks you cover.
Yeah, thanks, and great to be here, Melissa. No one's going to argue that Costco is a phenomenal company. We just have a neutral, primarily based on valuation, is trading at 33 times earnings, and at that kind of multiple, everything has to go right, and we are seeing a little bit of a slowdown in spending, and you saw that in Costco's numbers today. You know, giving Costco credit, part of this is they had such a great year last year, and they've been on such a great run that the comparisons are difficult. But the fact is we are seeing a little bit of a slowdown in spending. That's impacting their numbers, and at 33 times earnings, it's just not very forgiving. So love the company, don't love the stock here.
Michael, I'm curious how you think about the consumer and consumer spending and now versus how you thought about it, let's say, a month ago prior to the banking crisis. Has anything changed in what you're expecting the consumer to do?
Yeah, absolutely. Great question. We are now a little bit less bullish on consumer spending. Not that we were bullish in the past. We were pretty cautious heading into the year. We're more cautious now. In fact, our 2023 average comp estimate for the retail names that we cover is the lowest estimated that we've seen since 2008, 2009. So cautious heading in, and in the last month, just that much more cautious.
I'm wondering what is it in your model that caused you to do that? I mean, is it simply a sort of a qualitative thing? Consumers are less confident, and so therefore will spend less, or are there specific levers that have been pulled or pushed in that model to cause you to ratchet down your expectations?
Yeah, part of it is definitely we think there is some confidence or lack of confidence that will occur and show up in the numbers because of the banking issue. But tax refund data, as a great example, is pacing at the weakest level in 12 years at least right now. So that does impact spending in the near term. Other channel checks we've done. Some of our colleagues on a consumer team at Davidson, some of the checks they're seeing, it just looks like the consumer's not spending as much in March as they were. And we'll see the March retail sales numbers in a couple of weeks, but our view is from all the data checks we've been seeing and the tax refund data that is going to be a little bit of a softer month than we had expected heading in.
You know, I keep coming back to, for example, Jamie Dimon's letter a few days ago in which he said household balance sheet still, I think he used the words great shape, 1.2 trillion still in excess savings. We know that debt obligations as a percentage of household income still historically low. Is there a reason to believe that the drop-off might be slower or more gradual than in prior cycles?
Well, the consumer is still spending. They're just spending a little bit less than they were, and they're spending on different things. They're spending on much more non-discretionary items. So we're seeing, for instance, Walmart, reiterated their first quarter guidance, which means that they'll see a 4 to 5% comp. That's actually a pretty good number, but it's going to be much more on the non-discretionary side. So, what I said, our comps are as low as they've been since 2008, 2009. We still are looking for, on average, a positive comp. Costco, a very weak number today, but a positive number. So this isn't an all-out disaster. It just is a little bit of a slowdown than what we've seen in past years.
Michael, you mentioned the premium valuation that Costco has pretty much always had. Obviously, a big part of that is the membership revenue. Are we seeing any bumps there in terms of membership totals growth? What would you look for there in a further weakening economy as a signal?
Yeah, the membership's actually been pretty strong and pretty consistent. So if that does weaken, then we would sort of put that in the this is a disaster camp. But we're not really seeing that yet. I do think one thing that this current environment has caused is I think it causes Costco to push off their membership increase a little bit. That's something that's been talked about. It's every 5.6 or 5.7 years. That would have suggested an increase, a month or two ago. But we think that might not happen or might get pushed off a little bit just because it does seem a little tone deaf in the wrong time to increase the memberships by $5 and $10 right now.